Did you know that people can own tiny pieces of big companies such as Apple, Disney, McDonald's? That's what the stock market is all about. And today we're going to give you a brief overview of what it kind of looks like. And then as we go on through the lessons, we will get a deeper dive into different things so you can learn how it all works. The stock market is like a giant store where people can buy and sell small pieces of companies. And then these small pieces are called shares or stocks. These stores where people can come and buy and sell shares or stocks of a company are called stock exchanges. So some of the biggest ones, we have the New York Stock Exchange, we have the NASDAQ, which is also in the US, and we have the TSX, which is here. It is a Toronto Stock Exchange. All right, so in order for you to be able to go in and buy shares of a company, first the company needs to be listed on an exchange. And the way that happens is that a company decides to go public. Typically, the reason why they would do that is so that they can get exterior investors to invest in their company. That way they have more capital and they can reinvest it back into the company. And that could be anywhere from building maybe they want to build new stores, maybe they want to build a new product, or they just need to hire more people to be able to supplement the need for the company. Company decides that they want to go public and start selling their shares. It is called going public, or also known as an IPO. All right, let's learn some words that you're going to hear a lot. So the first one is stocks or shares. So it is a small piece of a company that you can own. Is dividend. So a dividend is some money that the company will give you, kind of like a thank you for keeping your money with us, or thank you for being a loyal customer kind of thing. Kind of like cashback. Is capital gains, and best way to put it is if you buy a stock for $5 and then down the line it goes up to $10 and then you sell it, that $5 profit is your capital gains. It's equity, and equity just is another word for ownership. It just means that you own a part of something. Quick challenge for you guys. Answer these in the comments if you know the answers. So number one is why do companies sell stocks? Number two, what's a dividend? And number three, can you name 2 stock exchanges? Can't wait to see you guys' comments at the bottom. All right, I just wanted to add this a little bit because I feel like this might help a little bit with just kind of getting the gist of what I was trying to kind of explain with the big stock exchanges. Sometimes they're not necessarily the most intuitive things, so hopefully this helps. Think of the stock exchange, so like the NASDAQ, TSX, as a giant shopping mall. The mall itself doesn't actually sell you anything. It just provides a safe and organized place for people to come and buy or sell things together. Inside of the mall, there are lots of stores. Each store represents a company that sells shares or some kind of a product. So then we have stores as companies. Each store in the mall is a company such as Apple, Tesla, Microsoft. When you buy something in a store, it's like buying a share of that company. Some stores might be really popular, while others might not be as popular. And it just means the attraction that they gain. One of the things to think about is volume. So if a store has a lot of people coming into it and it's very crowded, there's a lot of volume. Whereas if it is not, it's not as popular of a store, then the volume is lower. That'll come up in later lessons. The shoppers walking through the mall are the investors. Some investors or some shoppers are just there to look around. Others might go in and buy a little bit of product, while others might go in and buy loads of product. Shoppers can go in and out of stores whenever they want, just like investors can buy and sell shares or stocks whenever the stock exchange is open. So just like the mall, it's got open hours and close hours to the public. So I believe the stock market is open from 9:30 a.m. to 4 p.m. Eastern time. Right. So sometimes stores give you special deals or freebies like buy one, get one. That's like when companies give out dividends, extra cash for shareholders as a reward for owning their shares. Then you have security guards and rules. So the mall has security guards and rules that keep everything fair and safe. It's the same in the stock exchange, as there are exchanges are regulated to make sure that companies follow rules and investors don't get cheated. If we want to dig a little deeper into this analogy, we can think of the food court as an ETF or a mutual fund, which we will talk about later on, which is a collection of different stocks all in one place. And then we have a mall directory. So this is like the stocks ticker system. So you'll get very familiar with it fairly quickly. For example, some popular ticker symbols are stuff like Apple, which is AAPL. We also have Tesla, which is TSLA, or we have something like Starbucks, which is SBUX. So when you're thinking about the stock market, think about it as a giant mall where the stores are the individual companies that you can buy and sell. The shoppers are the investors, and your stocks and your shares are the product that each company sells. That's it for lesson 1. Next time we'll be talking about stock orders, so buying and selling stocks. If you like what you see, stick around, like, subscribe, share with your friends, and if you are planning on starting your investing journey sooner rather than later, then I will leave my referral link to Simple Wealth. It is a broker where you can go ahead and buy stocks there. See you guys next time.